The Open Army got a nice lift on Wednesday, folks, as Jane Street announced a massive position in the company. We got Kaz and team calling employees back to the office at the end of the month. Access Industries selling off 12 million shares. Is Wall Street bullish, bearish? We're going to break down the latest with Opendoor in this episode and also tackle the latest macro news, including Jerome Powell giving a speech on Tuesday that left investors a bit indecisive. All that and much more on this week's Midweek Check-In. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with your boss, share with a buddy. Don't forget to like, subscribe, follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, it's time yet again for the midweek check-in. And before we hop into it, just want to say thanks real quick. This show is, of course, on many podcast platforms, but specific to YouTube. We hit a very significant early milestone on the channel. By God's grace and by your support, we hit 1,000 subscribers earlier this week. So thank you so much for all the support. Very excited to see where this channel is headed. All right, so we got a lot to get into today. First of all, of course, though, we got to kick it off with Opendoor and the latest news that dropped on Wednesday. So let's kick it off there. We got some news, folks, of another investor hopping on the Open Army train. This from TipRanks. Opendoor stock jumps on news that Jane Street has taken a 5.9% stake in the company. The stake in Open Stock by Jane Street was disclosed on the social media platform X on September 24th. Jane Street is the latest high-profile investor to take a stake in Opendoor, sending the stock up 7% in after-hours trading and extending a big rally. Open shares are now up 414% this year as investors treat the struggling company, which specializes in residential real estate, as a meme stock. Opendoor stock has skyrocketed ever since hedge fund manager Eric Jackson disclosed a stake in the company and began promoting it on social media. So Jane Street, in case you haven't heard of them, Jane Street is a privately held trading firm based in New York City. It employs more than 2,600 people in Manhattan, London, Hong Kong, Chicago, and Singapore who trade a broad range of assets around the world and around the clock. So this is a very significant development, in my opinion. Jane Street is viewed as a leading market maker. The firm typically trades more than 10 trillion, with a T, trillion worth of securities a year. So the fact that you got Jane Street hopping in here after we've had some pretty notable bearish news over the past few days, which we'll get into with Access Industries and various notable short traders, bearish traders, right, putting out posts on X. The fact that you got Jane Street getting involved, folks, I think this is very significant. And this is a pretty sizable position. This, according to Fintel.io, as you can see right here, Jane Street Group, LLC, on September 24th. This is their 13G filing here, and the latest amount of shares that they now hold in Opendoor, just over 44 million shares. That is not a small position, folks. The fact that you got Jane Street hopping in with a 13G filing, just to, kind of put that in context if you were not aware, a 13G filing is an SEC filing, essentially saying this is a company that is getting involved and they want to be actively involved, right? This is not a passive investment from Jane Street. They are getting involved in Opendoor, and because they have more than 5% ownership, they are going to have some say on decisions. So this is a very, in my opinion, high conviction move from Jane Street, taking up almost 6% of the float of Opendoor. Again, over 44 million shares. That is massive. And just to put that in context here, I mean, if we take a look at Vanguard Group, Vanguard holds 66.4 million shares, right? So Jane Street is now up there with Vanguard as one of the largest holders in Opendoor. So I think this is very significant. I don't think a company like Jane Street would be getting involved in this company if they thought it was, going back to $2 or anything like that. Clearly, they have high conviction. They believe in the movement. So just thought that was very interesting. And we'll see here in a minute when we look at the chart for those on YouTube, what kind of reaction it had in after hours on Wednesday due to that news. Now, one of the other things I want to point out here, just some of the bearish news that we had been receiving earlier in the week, right? Monday, Tuesday. One of the things that really kicked off some of the bearish undertones in Opendoor was essentially Eric Jackson, calling out another stock, right? Another play. And one of the things I've been seeing is that, a lot of the Open Army, a lot of those involved in Opendoor, kind of got nervous about this, right? They basically view it as Eric taking attention away from Opendoor. But here's what you got to remember, folks. Eric Jackson is a hedge fund manager. He is not just solely involved in Open, and we really don't want that. I think it's a bad look for the company. The fact that he's involved in other things too, he's just doing what he does. I don't really think it's any skin off the back of Opendoor, so to speak. But, the retail momentum can be kind of fragile at points, and we saw that on Monday. So this from Yahoo Finance. Better Home and Finance stock soars again as investor behind Opendoor rally calls it Shopify of mortgages. Better Home and Finance, ticker symbol BETR, stock gained more than 25% in pre-market trading on Tuesday, adding to Monday's 46% rally after activist investor Eric Jackson called the company the Shopify of mortgages. Better Home, which opened for trading at $33.50 on Monday, traded as high as $73 in the wake of Jackson's announcement before giving up some of those gains and settling around $50 at Monday's close. So definitely saw some volatility in Better Home and Finance holding company. And, look, it makes sense. Eric Jackson's had a lot of success with Opendoor. And so the fact that he's putting out another play, we've already seen some of his other plays, right, that he's involved in getting a lot of bullish attention as well, such as Iron, such as Cypher. So, I didn't really make a whole lot of this. It's a little pricey for me to get involved in, but he's basically saying that this is going to be the Shopify of mortgages. So it is a very interesting play if anyone's seen this. But this is part of the reason I believe why we saw bearish action in Opendoor at the beginning of the week. He says, Eric Jackson that is, says Better Home is the Shopify of mortgages. It's rebuilding a $15 trillion industry from scratch with AI. I believe Better is a potential 350 bagger in 2 years. So pretty bold call there from Eric Jackson. And if we just do a quick check-in here of the chart for Better, as you can see, this thing went absolutely nuts at the beginning of the week. And it makes sense. Again, Eric Jackson has really built a platform. And so the fact that, he's calling out other plays now, it makes sense, right, that they are getting action at this point. So that was one of the things. And then you also have to keep in mind, too, that you had Access Industries, which we've talked about on the show before. They were one of the early investors in Opendoor, right? They were they were at the ground level with the IPO. Access Industries sold off about 12 million shares this week. And so that also put pressure on Opendoor, getting any kind of bullish momentum to the upside. And I've seen a lot of people out there on social media saying, hey, this is bad news bears. The Access Industries, one of the original investors in Opendoor, is now getting out. In my opinion, I don't really think that's the case. I think the fact that you have an early investor in Opendoor getting out is just part of how the markets work, right? I don't think it's anything to get worked up about, in my opinion. And actually, you could make the argument that Access Industries sees the leadership change with Kaz, and it's for the best, honestly, because Access Industries was one of the original backers of Kerry Wheeler coming in, and obviously Access Industries kind of sat by the wayside while the stock went down to almost nearly getting delisted. So I don't think it's the worst thing in the world that they got out. And Keith Rabo basically continued that point, taking a look at this X post here. This person on X said, everyone is silent. This decrease is not normal. If there is no intervention, it will decrease further. And then Keith Rabo says, the decrease is due to the investor who promoted carry selling their shares. Better for all of us. And I would have to say I agree with Keith on this point. I mean, look, we got new leadership. We got new faces coming to the company. Obviously, Kaz and team have plans, right? They want to do a complete 180 on Opendoor. They want to add new features, things like that. So the fact that you have some older investors getting out, I don't think is necessarily the end of the world. And as we saw, case in point today, new investors are constantly hopping in, as we saw with Jane Street on Wednesday. So I don't think it's that crazy. And speaking of Kaz, we got some things, in the works. This tweet from Kaz on X, he says, just reviewed a product we will launch in the next week or so. Super excited. So basically, from what I understand, Kaz and team are putting together a product for the buyer side. So traditionally, if you think about Opendoor, they're essentially known, or have been known, I should say, as basically just a home flipper, right? And so the fact that Opendoor is now going to begin to prioritize some more of the buy side of the transaction, I think is an excellent thing. Also keep in mind that Kaz is trying to turn around basically the entire company morale. He's calling all employees back to the office by the end of the month, I believe September 29th. And so clearly he means business. And honestly, I think it's really a good thing for Opendoor investors. Now, this other piece here, according to Benzinga, Opendoor is total garbage. This hedge fund manager says the business model does not work. So in case you haven't seen this yet, in a post on X, George Noble, who has founded $2 billion hedge funds and was an assistant to famed investor Peter Lynch, called Opendoor total garbage while warning investors against believing in its long-term viability. He says, quote, the company has lost money every single year since its founding. Noble said, adding that the business model does not work and has atrocious unit economics. Noble argued that the cost-cutting measures that the company is currently in the midst of are unlikely to have any material impact on the company's long-term trajectory. He says, quote, cost-cutting will not move the needle, while saying that investors can go ahead and speculate, but warns against pretending that there is a fundamental case. The post also drew comparisons between Opendoor and its industry peer Compass. Noble pointed out that while Opendoor trades at 22 times enterprise value to revenues, Compass is valued at just 0.9 times, maintains a, quote, strong balance sheet, and is profitable. So obviously, George Noble came out very publicly early this week with his bear case on Opendoor. And look, on some level, I understand it. The company definitely has not been profitable thus far. Yes, we had a positive adjusted EBITDA that came out on the Q2 earnings back in August. But generally speaking, yes, this has been an unprofitable company. One of the things I think George is not taking into account here are all the other changes, fundamental changes that are happening to Opendoor. He mentions in his post that he believes the cost-cutting measures are not going to be enough. We've already seen Keith Rabo say that he believes that this company can operate with an 80% staff reduction, right? Obviously, that's a massive cost cut measure there. In addition to that, you got to think about some of these other things coming out, right? Such as Kaz with, the buyer side initiative and some of the products they're going to be launching. I'm not entirely sure that George is taking that into account. So I get it. I understand why he has that opinion. I obviously disagree, but make sure to drop a comment and let me know what you think on that. Now let's hop into the chart for Opendoor just to see kind of where we're sitting at right now. So, I said on the market prep video that we put out on Sunday that towards the end of last week, it was kind of boring, right? It was kind of boring in Opendoor, not a lot of action, but we definitely got action to begin this week, not the kind of action bulls want to see. We saw 4 consecutive red days on Opendoor, and I believe a lot of that was due to everything I just laid out, right? Access Industry selling off shares. You have George Noble being bearish. Also, another notable thing that happened the other day is that Martin Shkreli, one of the more public shorts on Opendoor, closed out his position. He closed out his position and said he may revisit it down the road, but right now there's better opportunities out there. So that is very interesting to me, because if you felt so strongly too short Opendoor, you would think you would want to write it down for a bit more than $2. So clearly he believes he is not in the right spot. So I just thought that was interesting. But first of all, I just want to do a quick check-in here on, basically the daily chart, right? One of the interesting things to me about the daily chart is that we had 4 days, right? We sold off. The RSI folks got a massive reset. This is something that I have been laboring for some time now. RSI is a momentum indicator, and especially useful on momentum stocks, which Opendoor is. If we take a look at the RSI before the rally, 16% rally we had on Wednesday, we had an RSI sitting at 52. Just take a minute and think about that. 52 on the RSI, when we've spent weeks on end talking about the RSI flirting with overbought territory, upwards of 65, 70, 75, 80. The fact that we're at 52 is a very, very healthy reset. The last time the RSI was at 52, folks, just to put that in context, was August 8th, when the stock price closed at $2. So the fact that we have now gotten an RSI at 52, but the stock price is substantially higher than that, is excellent news. It was a healthy pullback. We needed it. And look, Opendoor is a volatile play. You're going to have moves to the upside and downside, and you just have to remember that. But we had a few things lining up after Tuesday's close that was very interesting. I was telling some of my buddies, in my opinion, this was kind of a load the boat moment. At the very least, a good spot to get in or add to your position. And here's why. First of all, we ran into the 20-day moving average. We also ran into this trend line that has been forming really since August 13th. And then in addition to that, we tapped the 38% retracement level on the Fibonacci retracement scale. You had 3 different things going on there, 3 different confluence factors. And so it was an excellent spot, in my opinion, to be a buyer, to add to your position. And we saw, Wednesday, a nice bounce, right? Now, obviously, there's a few different reasons why, we got a bounce like that. The overall market was slightly down on Wednesday, but Opendoor was up. Well, why is that? Part of it, of course, is Jane Street taking a massive position, buying up 44 million shares. I'm sure, that news obviously had an impact on Opendoor, but in addition to that, you had some major support right there at 692, that 38% Fibonacci level. That is a common retracement level for strong bullish movements. So I think that's what we saw. And now if we drill down into basically a 10-day, 2-hour chart, just to kind of see where we're at right now, on Wednesday and after hours, we saw continued action to the upside, getting as high as $9.18, right? So we got above the 23% Fibonacci level of $8.44. And really the next level that I'm looking at that I want to see us crush on Thursday's trading session is the 965. This is a fib level from a way larger time frame, a 10-year weekly chart, right? But this is a pretty important level, and you can see how we kind of reacted to it a few days ago. So that's what I'm looking at. And then, of course, getting above $10. But all in all, excellent action on Wednesday. Good to see the bounce on Opendoor. Good to see conviction from the bulls, and good to see the RSI resetting. Now let's do a quick check-in on the options chain. So taking a look at the action we saw on Wednesday, put to call ratio 0.52. So basically 2 times as many calls being bought as puts. Current IV percentile sitting at 43%, ticked up slightly due to, a lot of the volatile movements we've been seeing so far this week in Opendoor. It makes sense. But one thing I want to highlight here, not necessarily the weekly expirations, but the next monthly expiration, October 17th. Some of the notable open interest right now that we're seeing here, $10. Makes sense. Key psychological level. You got open interest of just over 38,000 contracts. And then at $11, the $11 strike, you got almost 27,000 of open interest there. So the bulls are very much still active. And if we take a look at the put side, you do have some notable open interest as well, sitting right now at the $8 strike and also at the $7 strike, right? So if we see a push, right, to either side, we could see some, gamma squeeze kind of action, right, as market makers hedge to remain net neutral. You're going to see some movement is essentially what I'm saying if we get above those key levels on either side. So that's what we got going on right now with Opendoor. Very excited to see what happens on Thursday. Heading into Friday, I think there's a chance that we can get back to $10 by the end of the week. Let's see what happens. Let's see if we get any other news that comes out. But as of right now, that is what I am paying attention to. All right, let's move on to the indices and do a quick check-in, see how things looked on Wednesday. So first of all, take a look at the S&P 500. And we've had a couple red days. We did hit a new all-time high on Tuesday of 66.99, which was great to see. But we have had some selling pressure. Real quick, one of the interesting things regarding the S&P that, I heard the other day, essentially we're in a position right now where you have 45% of households that are invested in assets. And, one of the arguments, I guess, against this most hated V-shaped recovery, as Tom Lee likes to call it, is the fact that, there's been the argument that really just the Mag 7 is holding up this rally. Now, as of right now, we're seeing market breadth get a little bit better. Right now, I think about 60% of stocks are above their 200-day moving average compared to 80% of them last year. So lower than last year, but still better than half are above their 200-day moving average. So we're seeing overall market strength, right? It's not just concentrated in a couple stocks. So I think that's good. Let's do a quick check-in on the tech-heavy NASDAQ via the Qs. A couple red days as well, pretty much mirrors the S&P 500. We had a new all-time high on the Qs of 602 back on Monday. And we're basically seeing a bit of a short-term rotation out of some of these high-flying tech stocks. Quick check-in on IWM, the Russell 2000. We did hit a new all-time high on that back on Tuesday of 247, which again just kind of gives more conviction, more validity, if you will, to the idea that overall market breadth is really in action right now. But as of Wednesday's close, IWM sitting at 241. The VIX got a bit of an uptick early on this week just from some of the selling pressure that we saw from various things going on, one of which being Jerome Powell and some of the remarks that he gave on Tuesday, which we'll get into here in a moment. But as of Wednesday's close, the VIX is sitting at 16. Now, if we do a quick check-in on Bitcoin, right, because we're always talking on the show about how Bitcoin is a risk-on asset, right? And so, it's a good way to check to see what is the appetite for investors, right? And so at time of recording, Bitcoin right now is sitting at 113,194, down just 0.1%. Again, at time of recording, we did get a bit of a sell-off on Bitcoin earlier in the week. We were hugging 115,000, sold off down to about, 110 roughly. And now we're seeing a bit of a recovery. So I would love to see it get back to 115. And I want to see how Bitcoin reacts to that, right? I want to see if it's going to be now resistance or if we're able to get right back above that and basically retest the prior high from the other week of 118,000. This is TradingView. If anyone is looking for new trading software, this is an excellent platform. Make sure to check the link in the description. You can get $15 off. All right, now let's move on to some macro news. First of all, I want to highlight this piece from Barron's. Powell points to darkening economic picture, says stocks are fairly high valued. Federal Reserve Chair Jerome Powell pointed to a weakening labor market and economic outlook alongside elevated prices in his remarks Tuesday afternoon, a combination that puts policymakers in a tough position. He says, quote, near-term risks to inflation are tilted to the upside and risk to employment to the downside, a challenging situation. He also said two-sided risks mean that there is no risk-free path, right? So basically he's saying the Fed is in a bind, right? The Fed is in a tough spot here. When asked about markets, Powell commented that the Fed does look at overall financial conditions and noted stock values appear to be elevated. He said, quote, by many measures, for example, equity prices are fairly highly valued. He added that it is not, however, quote, a time of elevated financial stability risks. His address comes 1 week after the central bank approved its first interest rate cut of 2025. Recent data show economic growth moderating, Powell said, adding that the unemployment rate, while still low, has edged up. Housing data remains weak, he added, and there has been a slowdown in consumer spending. At the same time, inflation remains elevated above the Fed's 2% goal. The situation is what Joe Barusla, chief economist at RSM US, refers to as stagflation light, an unfortunate situation where the economy wavers while prices remain high. So, Powell came out on Tuesday, gave these remarks. The market overall really didn't like it all that much. We saw the S&P 500 down nearly 0.6% on Tuesday after Jerome Powell got done speaking. And, he was slightly a bit more dovish than he traditionally has been, but he essentially was saying at this point the Fed is in a tough spot. They're in a tough spot because inflation remains elevated slightly, and in addition to that, you have employment looking a bit weaker, looking a bit soft. So as of right now, we are still projecting 2 more rate cuts by the end of the year, a total of 75 basis point cuts for the year 2025. So that is good news for stocks like Opendoor, especially small caps, right? But, one of the key data points that the Fed will be taking into account before their next rate decision will be PCE, personal consumption expenditures, the Fed's preferred inflation gauge that will be coming out on Friday. We'll highlight that later on in the show when we go over the economic calendar. But it'll be very interesting to see how the Fed responds to that inflation data. We want to see that come in, in line, essentially, right? So the Fed doesn't feel pressure to not cut rates. But as of right now, we're still projecting 2 rate cuts, but the market overall was kind of indecisive to slightly bearish early on this week due to Powell's comments. All right, let's take a look at this piece also from Barron's. Lithium miner stock doubles after U.S. proposes equity stake. The stock of miner Lithium Americas, which is developing a lithium deposit in Nevada to supply the critical mineral for batteries, nearly doubled Wednesday morning on news that the U.S. government is in negotiations to take a stake in the Canadian mining company. The U.S. proposed an equity stake as a way to renegotiate a $2.3 billion Energy Department loan granted during the Biden administration. The proposal came after the miner said it would be unable to meet requirements to receive the first loan installment, a Trump administration official told Barron's. So this is an interesting piece. Obviously, we've seen, President Trump and the administration take stakes, right, in companies like Intel, various companies, industries that they believe are essential to, our overall economy, national defense, things like that. And so this is the latest one, Lithium Americas. So this is very interesting. The U.S. has recently announced stakes in companies doing business in strategic industries. Those investments include 10% in Intel, which is secured by converting a grant issued during the Biden administration into an equity stake. In July, the U.S. invested $400 million in rare earth miner MP Materials. The news comes as the Trump administration aims to boost manufacturing in the U.S. through increased investment both from domestic businesses and international companies. So, one of the things that I've been trying to pay attention to more so of late are, what are some more potential deals that could be coming in? What are some other companies that President Trump wants to get involved in? Because we've seen some pretty massive moves in companies like Lithium Americas, like Intel getting a boost as well, right? These are all companies that are, obviously benefiting from the fact that, the U.S. government is getting involved in them. So these are companies you want to have on your radar. I mean, we just look at what's happened with Intel, obviously got a boost from NVIDIA as well, but really it's been taking off ever since we had that initial investment from the U.S. government. And then if we just take a look here briefly at some of the other notable ones that have been going on, you got MP, right? This is the $400 million investment that the U.S. did back in July. And you can see the gap up here, right? From 29 up to 46, and it's just continued up. So we see more and more, the administration getting involved, right, with some of these companies. And so definitely something to be paying attention to, headlines that is, right, to see what other potential investments the U.S. government is going to be making into publicly traded companies. This is a very interesting development. So, all right, let's move on to the economic calendar. So we got S&P Global Manufacturing PMI that came out on Monday. Wasn't that great. Came out at 52. The forecast was actually 52.2, so slightly down there. But new home sales, folks, that came in on Wednesday had a massive, massive beat. And this also gave a lift to Opendoor as well. We had a forecast of 650,000 new home sales for August, and the number came in at 800,000. So that is massive. Now on Thursday, September 25th, you're going to get durable goods orders month over month for August. We're going to get GDP for Q2, initial jobless claims, and then existing home sales at 10 a.m. for August. The forecast there is 3.96 million. I would expect that if new home sales are up, existing home sales will also be up. So that could be more juice to the upside for Opendoor. So I'll be paying attention to that. And then Friday, September 26th, core PCE. This is a big one. As I said earlier in the show, this is personal consumption expenditure, the Fed's preferred inflation gauge. You can definitely bet that Jerome Powell and the Fed are going to have their eyeballs on that PCE report coming out on Friday. So hopefully that comes in line. That'll be a good sign for continued rate cuts, but that is going to be a big one and will have a definite impact on the overall market. And lastly, let's take a look at Earnings Hub. For some of the key earnings going on this week, we had Micron that reported earlier this week on Tuesday, and they beat massively. Revenue estimate of $11.16 billion, and they actually came in at $11.32 billion. And their earnings per share was a beat of just north of 8%. So that was massive and good news for the tech side, chip side. On Thursday, we got Costco reporting after the close. So we will get a good look at the overall consumer spending trends. And that's really about it. Earnings, we're not really in earnings season right now. And, we still got a couple weeks before earnings season begins to kick in. In a couple weeks, we're going to get Delta, Tilray, BlackRock, things like that. So we'll be beginning, basically earnings season yet again. But as of right now, not a lot going on there. So that's what I got for the midweek check-in. Opendoor is looking fantastic, in my opinion. We had a nice reset of the RSI. You had new home sales coming out on Wednesday that gave us a lift. You obviously got the new investor coming in as well, buying up 44 million shares. That's pretty significant, in my opinion. And you got Kaz and team, of course, dropping new features for Opendoor. Very excited to see where we head the rest of the week. Let me know what you think about Opendoor. Let me know what you think about the administration getting involved in some of these publicly traded companies. Are there any conflicts of interest? Are you for it, against it? Would love to get your take on that. And also how you think PCE might affect us on Friday. So we will be back as always on Sunday for the market prep video, 7 p.m. Eastern sharp. Again, thanks for all the support. Looking forward to the next 1,000 subscribers, the next part, the next journey here on Stonkcast. Very excited for what's to come for this channel. As always, make sure to share with a buddy, like, subscribe. Don't forget to follow us wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.